Awesome. Thank you all for being here to this kind of like graveyard shift of ours. It's 6:30. We've been at it since the early morning. So really appreciate all of you being here. And hopefully, I asked Victoria to bring in some beers to accommodate everybody here today. So yeah, here with Tony, going to be talking about funding for crypto startups. I think it's going to be a really interesting one. As it is coming towards the end of the day, we would like to make it as interactive as possible as well. So definitely have a few questions lined up for Tony here today to kind of get things started. But if you do have any, feel free to kind of just raise your hand and we can kind of get straight to it. But Tony, maybe you can give us a little bit of a background to yourself and why you're here with us today.
Yeah, absolutely. Thanks, guys, for coming. My name is Tony Dong. I currently lead capital formation and business development at OP Crypto. OP Crypto, for reference, is a $50 million venture fund. We do primarily seed and pre-seed investments across the blockchain. I currently lead the fundraising efforts for our new vehicle. We're raising $100 million for a fund of funds that actually deploys into emerging managers. So two different angles there, but very kind of intertwined, and excited to be here today.
Fantastic. Tony, thank you so much. Maybe to give a little bit of context as well about myself, I'm the co-executive director of the Crypto Valley Association, one of the leading nonprofits in the space, based in Zug. For a little bit of context there as well, Zug is one of the largest ecosystems with over 1,128 crypto and blockchain companies that have been founded there. Since, of course, Ethereum being founded, a lot of the other crypto startups came to be. And I'm also the managing partner of Storm Partners, which is one of the leading service providers in the space, helping enable the Web3 strategy of some really big firms all the way down to smaller startups. And we've helped a little bit with finance and fundraising for various different entities as well. So maybe, Tony, you can give us a little bit of insight into what your investment thesis is, what you normally look for.
Yeah, absolutely. For us specifically on the venture side, I think we're very much more geared towards infrastructure with a kind of emphasis in gaming and especially kind of projects that, blend Web 2 between Web 3, call it Web 2.5, because investing in those projects, once you make that bridge, you access a larger target audience than you can just with a Web 3 startup.
Awesome. Okay, so infrastructure and gaming, we'll definitely get to that, but maybe we kind of dive straight in and kind of like tackle that kind of thorny bush in the room, markets. What are your thoughts?
Yeah, I mean, it's been a wild couple months, Obviously, everyone's seen it in their portfolio, definitely probably felt it in your heart as well. But yeah, I think it's one of the interesting times where things are very connected with the macro effects in the US, with inflation as well. And we're seeing kind of a very, very significant cool down in the markets compared to, December, even March. For us specifically, we've always been very kind of thoughtful in our investments. When valuations were very high, we were very selective in terms of the projects that we deployed. So, 20% deployed in the venture fund. So pretty well equipped to kind of survive this bear market. But, I personally think that we're in for a little bit more pain until it gets better. But I mean, like the sign says outside, this is the time to build. So, you guys obviously are in this room because you have some sort of conviction, and, we do as well.
Also, and what type of projects do you believe have been suffering the most in terms of, a lot of people here have been like, oh, there's a lot of trimming of fat that's going to be happening, right? We're going to get a little bit more leaner through this market. I mean, what have you seen has kind of been dropping out through these past couple of months?
Yeah, absolutely. I think so. When this whole kind of bull market was going, you would see a lot of copycat projects. So for example, an NFT marketplace that had a unique idea would get funded, but then, there's a tier B, tier C kind of project, but they would also get funded because investors were building off that hype, getting FOMO, et cetera. But realistically, you don't really need that many of a similar project. And those kind of, tier B and C type projects that were trying to address the same issue without that much creativity or innovation are starting to see some real struggles right now.
Awesome. And you mentioned that you're currently 20% invested, and so you have the 80 that you're looking to deploy sometime over what kind of horizon? What are you looking at within this kind of bear market, if we can call it that? Use the B word here. What is the kind of time horizon you're looking to kind of deploy the rest of that?
Yeah, I think specifically for our venture fund, actually, it's a 5-year fund. So we closed it in September of last year, so really 3-year investment period and then kind of 2 years to divest those investments. So, we've been very steady. So I think over the next 2 years, we're looking to take larger positions, lead some rounds now. So I think, yeah, in the next 18 to 24 months, we should be fully deployed.
Awesome. And then if we talk about the two elements that you mentioned, so infrastructure and GameFi, let's start by infrastructure. I mean, what is really kind of what are you really looking out there for at the current point in terms of infrastructure? I mean, there are a lot of companies that have been trying to build out the infrastructure now for the past, be it, let's say, even 10 years. I mean, what are some of the angles that you believe aren't covered yet or that are kind of covered but can be improved?
Yeah, absolutely. One of the most interesting parts of kind of the infrastructure ecosystem, I think, going back to kind of our investments, we're looking at something called Decent DAO, and that's essentially a venture studio. Originally started off as a blockchain consulting company, but it's really a group of people creating actually like DeFi rails and effectively putting together their minds to build out infrastructure projects. And the governance is kind of a DAO structure, so effectively you get shares of tokens based on kind of like what you build out. And I think that's a really great option for a bunch of engineers that don't necessarily have to be siloed to one project, but they can kind of pick and choose where they want to spend their time and they get rewarded as such.
Yeah, that's an interesting one. We're seeing a lot of other kind of like service providers or individuals that have the capacity to build up projects, and we've been helping other projects actually. They transform into actually building their own projects out as well. So when you're looking at investing within, let's say, the infrastructure side, I'm sure the team is a really large component. What are some of the components that you look at when you're really looking into the projects?
Yeah, definitely. Team is extremely important. We have a pretty long due diligence process in terms of just looking at the project, the roadmap, seeing if what they're asking for in terms of fundraising is appropriate, considering what they're trying to build. And then a lot of the kind of teams that we back are not first-time builders, so they may have exited maybe a Web 2 company or have had a lot of experience building in Web 3. And I think that's really important too, to just have a really core, competent CTO and management, et cetera. And we're very, very close with our portfolio companies. I think that we definitely try to help them out as much as we can between exchange connections and knowing people in the crypto space. So when they grow, we grow too. So it's symbiotic.
Awesome. And on the GameFi side, I mean, I've always been a bit like biased on GameFi because being an ex-gamer, I always used to love to game, and it was always like play for fun, right? And now it's turned into like play to earn. And I feel like the next generations, they're never going to want to play for fun anymore. It's going to be like, wait, if there's no money in it, like why am I going to be playing Tetris or Pong or whatever that might be? So what are your thoughts on like that future kind of like GameFi and how that whole kind of space is moving forward?
Yeah, I think honestly, all games in the future should have probably a component of Web3 blockchain integrated. You're never going to see a game again that doesn't have those mechanics because now you get rewarded for the time that you spend, and there's a lot of interesting tokenomics that go behind the game design. But it's going to take some time, right? So the major AAA studios are working very hard trying to get into blockchain, but it takes many, many years to build a really solid game. Right now, you're kind of seeing projects come out that are experimenting with different tokenomics and different game design, but you'll really see like the quality AAA games come out in the next couple of years as well.
Fantastic. And if we look at those like GameFi projects, a lot of them have like either NFTs, which are like the in-game kind of avatars. They have their own token and all these things. What are your thoughts about projects that have multiple tokens in them from like an investment perspective? Like, how do you get exposure to those projects? Do you kind of invest in all each kind of like from the equity standpoint, from the token, from the NFT? Do you get like a little bit of each? Like, what is your preference, and what do you think about that model as well?
Yeah, absolutely. For us specifically, I mean, we do a mixture between equity and token investments. I think for us, our preference is token actually because just, we're better able to, assist them in a value add manner, just given our connections to the exchanges, market makers, et cetera. So on the gaming side, I think we're seeing a lot of new games being built, but hold on, I just lost my train of thought. Can you give me the question again?
The question is essentially when you have these different token types, right? You have an NFT which has a different, let's say, value proposition to a utility token, which of course has a different value proposition to actually have the underlying equity. And if I add a caveat to that is that none of the two former ones that I mentioned are actually investment products, right? As in, like, if you go to a financial regulator and you try to get an opinion on them, you're actually going to tell them, hey, this is not financial product, like we're not trying to, like, this is not going to accrue in value, all these different things, yet they're being used as financial instruments. And so when you're investing in them, you mentioned you
Yeah,
do more
we
tokens?
honestly haven't looked at any kind of gaming projects that have NFT components to them. It's pretty much all just token related. But at the same time, our core thesis is it's really hard to essentially find which is the best game. There's always going to be games being developed, etc. And you really have to invest in all of them to hope one of them will be really successful. And investing in the studio model is also a little bit difficult, which is why we tend to try to focus on the infrastructure layer instead.
Yeah, I'd love to touch upon that one when you mention like the studio model, right? Do you normally try to invest in the specific games themselves, the ones that you think are going to do well, or do you try to kind of go from that group approach and like, okay, this studio is developing some really nice games, I'm going to try and approach them because I think whatever happens, maybe it's 1-2 games kind of flop, but that third one is really going to do well, like studio or specific game?
Yeah, it's definitely the studio model, but we actually do more investments in the gaming guilds. So Merit Circle is one of our big portfolio companies, as well as Snack Club, which is what they're doing in kind of LATAM. And that's a really good avenue to get exposure to the gaming kind of world because, all of these game companies are going to these guilds to essentially kind of make a relationship. And by seeding them, you see all of the deal flow, and you're really able to kind of pick and choose which projects are the best, but also by investing in them, you kind of get an overall exposure to the ecosystem based on the games that come into them.
Yeah, fantastic. And of course, it costs a lot of money to build out a game, right? And some of these games are really well funded. But from the gaming side of the community, it hasn't really been adopted so much. There's not many kind of gamers that have been like, wow, play to earn games, this is amazing. It's been mainly from kind of like crypto degens that are kind of be like, oh, I can do this, or even maybe in some developing countries. I mean, in your opinion, what is kind of lacking for there to be more adoption from the gamers that really like playing games to kind of be like, oh, I can play this game that I like and also earn a living whilst doing so? I mean, where do you believe that friction comes from, and do you believe that there will ever like be a kind of a bridge between that, or not?
Mm-hmm. I think we're at the point where it's still a little bit early in that you're playing these play to earn games, but that you're playing it because you're trying to earn money and tokenomics, whereas if you're playing like a Grand Theft Auto or Call of Duty, you're playing to have fun. And I think the games aren't there at the point where I think eventually while you're playing these games, you won't even notice that it's related to blockchain. You won't notice that they're creating a wallet on the back end. You won't notice that you're accruing tokens. You're just playing to have fun, but you're also interacting in Web3 in gaming, and that's where the shift will happen eventually for sure.
Yeah, there's even a rumor that just came out, I think it was today or yesterday, that GTA 6 has a crypto component in it. So actually,
Yeah,
it's a really great example.
No, I can't wait.
It's going to be crazy. And maybe I touched on the element of the developing countryside where you see a lot of, be it like Axie Infinity, Alien Worlds, a lot of these other like play-to-earn games that are really kind of the ones that are being adopted the most at the moment. A lot of their community comes from Asia or from let's say developing nations that are playing those games because they can earn more by playing the game than they can maybe by going out and working. I mean, do you see that's then converting more into let's say the westernized nations as well, that there being more of a balance of these play to earn games, or do you believe really it's going to be for those individuals to bridge that labor wage gap?
Mm-hmm. I mean, just right now, the product market fit is in the emerging markets because, you can make more money than your actual job. But whereas in the Western world, like you do have well-paying jobs, like you're willing to, pay someone for their time. So until, the tokenomics model switches and whatnot, I don't think people in the Western markets are really going to be spending their time playing Axie Infinity to farm, SLP and whatnot.
But there still is a bit of clout to it, right? If you look at maybe a bit the kind of the Bored Apes, they're rather expensive, and people want to buy one for the clout of being able to then use it within like the other days of the other side, like in the metaverse as well. So maybe there's a way to kind of have an element that is maybe a bit more expensive, and that maybe is approached by these people that might just want it for clout, and then the other side where you can actually work to kind of earn it up as well.
Totally. Yeah, but to your point, I think it's like those types of games like are very crypto native users that play. It's not like your average Joe is, playing Axie Infinity and stuff, but once you get that model in like a Grand Theft Auto or whatnot, those skins become way more valuable. And honestly, like one of our theses at the fund is gaming is going to bring the next 100 million users to Web3, just given, the amount of interest there is, and they're not even going to realize that they're moving over to the blockchain. It's going to be, seamless, hopefully.
Yeah, hopefully.
Yeah.
Fantastic. And if we move on to a topic based around like the jurisdictional element, right? I mean, you're based in New York, in America. You're here in Europe, in Barcelona. I mean, why are you here? I mean, not from like like what brings you to Europe? What are your thoughts about the European ecosystem? How do you feel about being here?
Yeah, no, I love, traveling around, meeting new people. I think Europe is definitely kind of an area that our fund specifically doesn't have very great roots. So it's important to, show face, meet founders, meet funds, etc. And I do think that the EU is definitely, more advanced in terms of setting up legal frameworks than the US. Obviously, we're going to see a lot more kind of, legislation being passed and with all the stablecoin stuff that happened. But I think the EU is a little bit more forward thinking in that, which is great. So love to hear new perspectives, love to connect with people, and yeah, it's great.
Fantastic. And in America, I mean, how do, like, when you're looking at projects there, when you're looking at investment rounds in America, we all know that kind of there are a lot of projects in Europe that actually go to America to seek fundraising, especially in Switzerland. We see that Switzerland is named one of the most innovative countries in the world. However, I mean, a lot of the unicorns or that become unicorns, they actually go to Silicon Valley or somewhere else. I mean, you mentioned that you're seeing Europe, Barcelona, other kind of crypto hubs in Europe as talent pools of interesting innovation. I mean, how does America see that, or how does like other fellow investors of yours see that from the American perspective?
Yeah, I do think there is a lot of venture capital money in the U.S. and a lot of projects do come to try to get that capital. And the topic of this discussion is funding at its peak, and I think it was pretty hectic. Just 6 months ago, where it was very much so a builder's market versus a VC market, and us as a venture company, and I'm sure a lot of other ones actually had to go pitch founders, what's your value add, etc. But now we're seeing a shift in that, the power has swung back to people with capital, and you're seeing a lot of down rounds. So just looking at a few companies last week, seed rounds at its peak were something around 40 to 60 million, depending on the valuation. Now a company came back to us, oh, we can drop to 25, oh, we can drop to 17. Like there is quite a shift in sentiment, but I do think that the U.S. is still an excellent place to get that funding. I know A16Z raising their $4.5 billion fund announced last month. Like there's plenty of capital, especially if they're trying to dedicate that to some early stage. So plenty of opportunities, but it's definitely more focused now on shipping really, really good products instead of just, doing another NFT marketplace, right?
Yeah, I completely agree and understand, right, from the mirroring perspective that you mentioned earlier on. And so we've seen, a lot of these bigger companies, like they were heavily funded. They went through Series A, B, even sometimes C for some of the larger companies. And now this recession has kind of hit, this bear market has hit, and you see a lot of those larger companies that raised so much, that had hired immensely, now they're stopping their hires. Some are even kind of firing a percentage of their staff. I mean, from an investor's perspective, I mean, how do you see that? Do you believe that it's kind of it's part of the game? They needed to hire quick because they needed to accommodate to the market, or do you believe they should have been a bit more cautious with your money ultimately?
Yeah, absolutely. I think definitely there was some folks that got caught up in the hype. I mean, just the trajectory was insane, and a lot of the growth equity funds FOMO'd in, and they were able to raise larger and larger rounds. I don't think a lot of people were focusing too much about valuation when initially seeding a lot of these projects, even at the earlier stages, which is why I think it's important for venture funds to be very cautious when, even in any market, bull or bear, to really look at valuation, really look at the team, and not get caught up in the hype. Now, like Bain Capital is holding bags, like they're down pretty bad. Yeah.
No, definitely. And maybe we kind of turn to the audience here. I mean, are there any startups around by any chance? Raise of hands, startups. Okay, look, so there are still some young companies here, some entrepreneurs. What were some tips and tricks that you can give them, if they're looking for investing at the moment? What's some advice that you might be able to give to them if they're looking to raise?
Yeah, absolutely. So, like I mentioned, I think it's more crucial now than ever to really have a great kind of business plan going forward. When you're asking to raise funds, et cetera, like you really need to have a targeted focus and understand how far is this runway going to get you. And honestly, sometimes the story and the narrative is just as important as the product you're building. So I'd encourage you to, reach out to venture funds, early stage especially, and just ask for their candid feedback. I think most people are more than happy to actually, give you really good kind of advice, and that way create a better pitch, kind of get that narrative going, make it sound more compelling, and that would definitely help you raise capital.
Fantastic. And maybe one of the last questions here before we do turn to the audience for some questions. I mean, maybe you can leave us with some of the trends that you're seeing, what you're really looking into for the future, and some things that you believe are going to be trending for the next 6 months, maybe year, that you believe is going to be maybe not the next hype wave, but that you're like, okay, this has a really good there's a really good opportunity here to invest in.
Mm-hmm. For me personally, just leading our fund of funds effort, I'm really bullish on emerging managers coming to the space now. You look at these guys, they're raising first-time funds, first-time GP, but not first-time investor, very, very hungry to do well. When they're funded, 100% capital, 100% ammunition with no baggage. We look for, people that are very specialized in a specific sector, have a geographic concentration, and I think that these new fund managers are going to drastically outperform, and we've seen it. The market is very cyclical, and deploying in a bear market, I think Accolade released a report for 60 venture funds over the last 4 years, and I think the aggregate return for closed-ended funds was about an 8 to 10x, which is quite compelling. So hopefully, these emerging managers can knock it out of the park, but I'm really bullish on the ecosystem, and I think it's harder and harder to become a generalist venture fund these days. You really have to have like a targeted focus, targeted value add, and these are the type of folks that we want to back and we want to support.
Yeah, stay hungry, stay foolish.
Exactly.
Fantastic. Wonderful. Well, Tony, thanks so much. And I finished grilling you for the moment. Maybe let the audience get to it. Please, if anyone has any questions for Tony here, happy to have them.
Thanks a lot for the presentation and for the candid talk. I have actually 2 questions, so I'm going to be a bit cheeky. But what is the crazy story maybe that you've heard with crypto startups getting funded at its peak? And then second is, for example, you were talking a lot about gaming, that 80% or a large part of your portfolio is gaming. What would you say is the next frontier for crypto investors afterwards?
So to answer your second question first, I'm really bullish on the metaverse actually. And one of the funds that we actually seeded was called EveryRealm. So Republic, they have a group that spun off, and they're creating a metaverse-specific fund that focuses on metaverse land investing, infrastructure, and gaming within the metaverse. So I think that's a really, really interesting kind of field that we don't have that much exposure, but learning a lot about it through chatting with the GPs of that fund, and now we have exposure through the fund of funds, and the addressable market is insane. Obviously the tech isn't there yet. If you guys have used an Oculus recently, it's not amazing, but it's definitely better than it was a few years ago. And then, sorry, can you remind me your first question again?
What's the crazy story in the hype of crypto funding?
Yeah, I mean, you guys remember like that SoulChecks product, right? I think there was like 100 VCs on the cap table back in December, which I thought was a pretty big red flag. I mean, I don't sit on our investment team, but there was a lot of back and forth about the product being kind of a little skeptical, but just seeing so many VCs on that cap table at such a high valuation was definitely interesting, and obviously we know how that all went.
Thank you.
Yep.
Anyone else? Questions? You have an investor here, all lonely.
Thank you guys for your presentation. I have an interesting question regarding your fund strategy. I mean, first you started as a direct investment fund, and then you managed to launch your FOF. I mean, how do you what's your thinking or strategy when you were making this transition from a direct investment fund to a FOF in the Web3 or crypto sector?
Yeah, absolutely. I think both are very synergistic, and our whole vision for OP Crypto in general is to build out a bigger platform. So the founder of OP Crypto, David Gann, actually started his career off investing at Huobi, where he led their venture arm, but it was unique in that he also did fund-of-funds investments, so seeding funds like Multicoin, 1KX, Dragonfly. And we really are in an environment now where we think we can replicate this strategy specifically. And how it's so synergistic is, think about it like we will eventually be deploying into 15 to 25 funds, each one of them with a very, very defined sector focus or geographic coverage. And us having our own venture fund, the deal flow sharing and thought leadership is immense. And being able to, really help them in terms of fund setup, I think we can help these emerging managers a lot, but at the same time, the deal flow is massive.
So it's like you're going to have your direct investment fund and funds of funds operating at the same time.
Yes, exactly.
And you think it will bring you guys synergies in doing so?
Absolutely. So like our core competency, I think like our fund mainly, focuses on bridging East and West. I think a lot of our members have kind of some sort of background in Asia, et cetera. But that doesn't mean like we have great coverage in LATAM or South Africa or Israel, and these are some types of emerging managers and markets that we're looking at. So having those in the fund of funds, you get exposure to the deal flow there in core competency areas that you might not have coverage on specifically.
Understood. Geographically makes sense. Thanks.
Definitely, yeah.
Wonderful, great question. We have another 4 minutes left. Thank you.
Hi, my question is, you as an investor, what's the most important three things that you really evaluate? I mean, besides of imagine that is a good project, but what is the most important things besides of the project that you really evaluate? In terms of decide if you are invest and how much you invest in some specific project.
Yeah, absolutely. So besides the fundamentals of the project itself, like I mentioned, the team is super important. So like having a very, very competent CTO and kind of, higher management is great. And, a lot of early stage VCs, they all talk to each other as well. So looking at cap table is pretty important too, because you can see which VCs that enter and every one of them adds some sort of, different value add. We do deal flow sharing calls with 50 plus VCs a month just to exchange thoughts and whatnot. So the most competitive projects I think are a lot of people are talking about the same ones, and we're able to share thoughts around it as well.
That's a great point. I think there's also the exit plan as well sometimes for various investors, right? They're like, okay, do you have a plan for me to get my money back at some point? We've seen that being a really important one.
Yeah.
As well.
Yep.
Wonderful. We have time for one last question, if anyone has one.
Thank you, guys. So, short question. Do you read cold emails?
Do I read cold emails?
Yes.
Yeah, I do. Like I said, I don't sit on like IC or anything, so when projects come through, I definitely just forward them off to the right folks internally. We have analysts that specialize in each specific vertical. So I mainly do capital formation on the fund of fund side. But to answer your question, yes, I do. My email is tony@opcrypto.vc, and my Telegram is TonyDongOP.
There you go. You will read it. Tony, thank you so much for joining us here all the way in Barcelona. Hope you all enjoyed it. And now time for the drinks. Thank you.
Thanks, guys.